The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate your growling and prowling with us. We have the Dow Industrials up 139, Nasdaq up 32, S&P's up 13, gold contract up $6.50 at $13.20 an ounce. You get silver up 9 cents, $15.78 an ounce. Both gold and silver, folks, caught a big bid after that CPI number come out. What's going to be interesting here is that, you know, you get the CPI, it wasn't bad, but the bottom line is that energy is very inexpensive. So the CPI running at 2.2 with energy inexpensive, all energy has to do is go up a little.
What else is hot, right?
Action, man. Action in the metals market. And we'll see where this dollar wants to go. The dollar did he hasn't done it yet. We'll see how he shake out. You got a triple top up here, man. And triple tops, folks, are really hard to do. This is going all the way back to November. So we'll see whether we can blow it away. Yesterday, you got the 97 in the index. Went up there again today. Couldn't handle it. See where that shakes out. Notes and bonds still rejecting lower price. Pretty amazing, actually. The 10-year was down 4 ticks yesterday. You're only down 7 ticks. And you're at 121.24. 30 years down 9, 145.22. Bottom line is that we got action in this marketplace, and the bulls and bears are going to be fighting this out in a huge way, because what you've done here is that you're coming right into the October 10th and the 11th, as well as the December big downdrafts. That's where we're at right now, and we'll see who's going to win this fight.
Okay.
Let's get some help with this, baby.
Let's do it.
Let's get over to Chicago to our man, Mr. Kevin Hinks from TD Ameritrade Think or Swim. And don't forget, folks, every trading day, you want to understand defined risk, you want to understand strategies, options, bull, bear, futures, all of the above. Great program, 11 to 12 Eastern Standard Time. If you haven't test-driven yet, the Think or Swim platform, real easy to do. Just right at our website, you can see the banner, click the banner, bring it up. They'll allow you to trade with paper money, and you can follow Kevin and his team each and every trading day. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy. Another day. We're ripping here. I mean, I'll tell you what. Here's the thing that Oliver Reddick and I just spoke about. You mentioned the CPI data that came out.
Yes.
That was kind of a tricky number to look at, and you saw that in the bonds.
Right.
Bonds sold off when this number came out. And why? Because take gas out of this, and this number came in a little hot.
Exactly.
I mean, I was looking. I have the report here in front of me, Tom. Shelter, apparel, medical care, recreation, household furnishings and operations, eating in, eating out, all went up during the month. But all of that was muted by a 5.5% lower gas prices. So you're exactly right, Tom. What happens if gas rallies 5 or 7%?
No doubt.
We're going to have a little bit of right. And if you're Jerome Powell, you don't look at the headline number. You're looking at this data, and suddenly there's a little bit of firming here, and I think you're seeing that in the bond market.
Yeah, and folks, if you want to see something that's really interesting, that I was watching the bonds like a hawk, Kevin, and what had happened is that they came down hard and fast, folks, but then they stopped dead in their tracks, like boom. They just, it was like someone's sitting right down there and buying them. It couldn't even take out the lows of last week. It's like, whoa, hold it, man. You know, so that's a heads up. There's still someone in there buying those things hand over fist. And as you just said, when you actually dig into the numbers, you know, my take is that energy is going to stay low anyway, but the reality is that we know we spend a fortune on energy, and that number was hot. I'd say that number was hot, man. Well, the gold market's telling you it's hot, you know?
Right. I mean, how about that, Tom? How often do you look at the dollar up and gold up?
Yeah,
that's telling you something.
It is. It doesn't happen. That's the bottom line. Yeah, it really doesn't happen.
That is a macroeconomic anomaly right there.
Yeah.
When the dollar is stronger and gold is up.
Yeah.
So that's another thing to look at. There's a lot of things jumping out at me here in these markets to look at. I mean, how about this one, Tom? We were looking at some names yesterday, and so many of these names that you're looking at, like when yields are doing this, right?
Yes.
like the utilities, the real estate, those are at some multi-month highs here, right? Those are going to come under some fire. Banks should be firming up, I think, with that number. But it's still all having to do with good news coming out of China. I think Mnuchin and Lighthizer are going to meet with Xi Jinping on Friday is really good news. It implies that there's something good happening there, even if it's slow and incremental. So far, Tom, so good. That's,
Listen,
we're off and running here.
No, and what folks, what you want to understand more than anything, I think, is that no matter how big a company or a smaller company are, it's all about cash flow. And, we can basically have wars on a continual basis, but the bottom line is that these big dogs, meaning big financial companies in the marketplace, my take is that, hey, guess what? They'll go so far and they'll say, hey, listen, man, we need a cash flow, man. If we don't have a cash flow, there's trouble in paradise. And so, politically what ends up happening is that they don't care whether someone's purple, man. When it comes down to it, it's going to be about cash flow. And it's going to be about knock it off. Listen, we got to do business, and business is business, and that's it. And it's that cut and dried. You can.
I mean, you guys know me. I really pound on the macroeconomic data, and I look at that a lot. And that JOLTS number yesterday that you and Tommy and I talked about, that was a strong number. Yep. And eventually, this stuff's going to start showing up in wages. And you know where wages go, right? Wages, higher prices. So this economy. Take Europe, the Eurozone, the rest of the world as it is. We are not weakening here. We may be coming off some unsustainable highs, but this economy, by any stretch of the imagination, is not weakening.
Yeah, and the reality is that if it can get spread out. So let's say we talk about wages. If it actually gets spread out, it's going to make a big difference because if you go back, folks, 20 years, 10 years, 20, 30 years, wherever you are on a scale of age. It's the consumer, and it always has been the consumer in the U.S. that drives the whole world. Not just it's the world. It drives the United States. The United States drives the world, and that's kind of how it is. I mean, that could change in the future, but the bottom line is that that is a good seedling that drives everything. And
guys, we had some good API data come out last night, but did you see any of the IEA report that was released yesterday? Pretty ominous for the long-term trade in crude oil. And I think you're right, Tom. I think we're lower crude oil prices for longer. I mean, they basically talked about the supply, especially coming out of the U.S., just overwhelming demand.
You know what? When
a lot of cross currents there.
No, totally. When I first got to understand, what happens with an oil well, folks, is this picture. A mine takes 5 or 6 years. A good oil well, to drill the whole ball of wax, 45 days, man. You drill the thing down, you get a bathtub full of oil down there. And once I got to understand that about 20 years ago, it's like, what? Do you know what I mean? I never understood that, finding it is one thing, but once they find it, that's all it takes. 45 days, you drill it down, and it's like a bathtub. And then you bring it out, it's like, wow. That's a great business, man. So evidently, we have a lot of bathtubs out here.
Right. Yeah. With everything we have with electric cars, with everything we have with U.S. Supply, oil is an interesting trade for sure.
It is. Right here, folks, 45 minutes from now. And, folks, this is a great market, and you want defined risk. It's a widespread market. You get defined risk in a widespread market, and the option market with strategies, you're in good shape. Kevin, we look forward to the program. 45 minutes. Appreciate it, man.
Always a pleasure, guys. Have a great day.
Thanks so much. Stay right there. Tommy and I come right back, folks.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. We have the Dow up 126. Nasdaq is up 13. S&Ps are up 10.5. And that NDX, folks, is leading this market lower. It's going to be interesting watching this whole thing shake out. You had the S&P do that big spike higher, and with that, my take with that is that they were grabbing up there, getting as many stops as you could, selling into that market. That was quite a spike. And then it gave it up in spades.
I'm going to jump around, all right? I think this one pulls up all four markets. So we're going to have the Dow top left.
Look at that.
NASDAQ top right.
Yeah.
S&P bottom left, and then your Russell. So you can kind of compare. I mean, look at S&P and Dow almost identical, right?
Yeah.
Definitely a greater pullback in the NASDAQ where, you know, you have your 5 a.m. low. That correlates to your 5 a.m. low. Where NASDAQ, we had peaked below that level, not even close in the Dow and the S&P, and Russell more like the Dow and the S&P than the NASDAQ. A little bit of an outlier with that acceleration.
It wasn't. What you had, and this is subtle, folks, but you want to pay attention to it here. Watch this. The NASDAQ NDX 100 has been the strongest for years. You know, it brings the market up, brings the market down. And yesterday was a big heads up because it couldn't take out its swing high. You know, 171.23. I'm just using the cues for that.
Yes.
We hit 171.14.
Okay.
And the other ones took it out really well. So I was like, okay, man. You know, I was looking at that this morning, and the NQs were up good this morning. You know, they were up good, but it's like, okay, if they sell that off first, and in particular, where my head's going is that we get a couple of chip stocks coming out tomorrow.
Okay,
and the chips are dangerous.
I just have to. We're at 171.37. That's the exact high that was February 6th to the penny. So we'll see where.
Yeah.
Which is ironic, right?
Yeah.
Sitting right at that level.
Oil,
that's right. So let's jump over first. I was going to take a peek. We get the EIA number at 10:30, right? This is kind of a little preview. So, is this for the API? No, API. Yeah, what did the API report?
They had a drawdown, I think, at 973,000 or something.
API, maybe it was
998.
998. Okay, that was last night, and you had gas stockpiles rising. We'll see how this goes up. I'm just going to jump in to see if there's a top live before. They don't have it up there yet. Okay, that's all right. We'll pull it up. So. Is it up there?
No, it's not.
Yeah,
no,
that's
interesting.
I know. I think it's been a little late. Usually they have it 10 minutes ahead of time. But here's the price of crude. So, man, quite an acceleration. I started taking a look at this
during the last commercial break, and we're jumping 20 cents just even taking a look. And from 8:30 this morning, we just traded up a full $1. So some of the spreads, and I had gold up here as well, quite a move in gold jumping around. But crude oil, looking at the March contract, the 11 a.m.s are the ones that line up. Really the only ones that make sense for volatility.
Okay.
You have 54.25, going to be a point where you can have bullish exposure for $1.50 up. Same thing, 54.25, bearish exposure, $1.50 down. Again, the contract trading about 6 pennies away from that level. Now it's 5. So your bullish spread going to be the one that you have about 5 pennies of intrinsic value, costing you 24. And on the flip side, you're selling the bearish spread, all premium, 19. So you're looking at $43.
4.3 pennies. Okay.
Yeah, 43 pennies.
43. Oh,
right?
that's right.
Yeah.
It's not natural gas. Yeah. Right.
From 54.25, and you know the nice thing about this though is that you really don't need a directional bias when it's this close, because
Right.
you don't have a directional bias. You have equal.
Which is good.
Yeah, you know.
Right.
And this, if you just want a straight volatility trade, you're so close where it can pop both ways, as opposed to, and just to jump around, you know, you have just let's see the noons. Yeah, you could use 54, or you could use 54.75. That's a great example where you'd have a 30 cents of intrinsic value on either side, right? You could do a bullish trade like that,
yeah.
or you can do a bearish trade, and your other one would just be a small premium trade, and the dailies line up a little weird as well. And I say weird only because we've moved so far in crude since where we were, you know,
9 o'clock.
last night.
Even 9 o'clock, right?
Yeah, and I think what time does crude close at 2:30, I think, and that's where things get really, because here's 2:30 yesterday at 52.75.
Yeah.
So we're up, you know, big time since then. So we give those numbers at 10:30. We'll see where we come out.
Let me pull this up for a second. So.
And natural gas has moved today again. Look at that. It's down 3.3%. Natural gas down 9 pennies.
2.59.
I know. We can jump to, but
wow.
Crazy, right?
So this contract, you only got 291,000. That's light contract volume. You had one good move up. That's it.
I mean, are we really in an oil economy that we're going to see $60 oil again? I don't know.
I know.
Right? That would seem hard-pressed. Even Kevin Hicks was just talking about it, you know, in terms of the fundamentals of what we in the U.S. produce, along with the world market, and then with waning demand from the likes of Tesla and so forth.
Yeah. No,
but I never know, man.
I'd go for, you know, you get that one spike there, but now we got over it with tremendously lighter volume, so it's going to be wild.
So what were you saying? Did you have a directional there at the end, or no?
The directional will be down.
Downward. That's what I said. Yeah.
It would be.
And
not by much though.
No, sure. I was just curious.
Because of that one spike.
I mean, I feel like I overall, not even to do with anything today. Number one, you've already moved so far, right?
Yeah.
And number two, it's just you're reaching levels where you're almost at 55. You're at 54.31. If you're at 55, do you think it's more likely you go to 50 or 60? I'd be like, I just think it's more likely overall you go to 50.
Right.
So you keep that in mind. And I'm just jumping around. I wanted to see. So here's, I mean, we always talk about just going both ways, but this is where, you know, if you're just going directionally, you're able to sell it at 54.07. The premium you're paying is that you're selling it, you know, 23 or 24 cents below the market, but you're risking 18. And if you ever get around to 52.75, you know, that's quite a risk reward there that you're dealing with in terms of 6, 7 to 1. I like those trades sometimes when you're directionally.
No, totally.
Yeah,
totally.
But that's only until 11 as well. So just jump around. This is nice. When you get the noons, let's see the noons. Now this again, this is where let's see what because it's always interesting. Sometimes you don't end up paying much premium. So here's a noon. You're going to be getting in it if you're going short. I'm just playing the short, right? So this is how you already have value, and in this one you have 45 cents of value. You have the difference from 54.75 down to 54.30.
Yeah.
So you're selling it, and you're risking 51 for 100, right? You're risking 1 to make 2. It couldn't be a more perfect example.
Right.
And the only reason that they're giving you that kind of risk reward is that you're selling it $8 to $10 to $6 under market, which is the premium.
Right.
So
which isn't bad. Though.
No, and that's exactly why I pull it up, because you know it's a really close to an at-market trade, yet this one goes till noon too,
which is good.
And and you lock in a 1 to 2 risk reward. That's a great trade if you're bearish, I would say. You know, right?
Yes, exactly.
It's got to move in your direction no matter what, because if it expires where it's at, you're going to lose that 7 cents. Right? The market doesn't move, you lose 7 cents. That's the reason for it. But with the EIA coming...
I'd take that
Yeah,
trade.
I was just going to say, with the EIA coming in 4 minutes, you have 90 minutes of exposure. If anybody follows the market, they should say, geez, 6 or 7 cents is going to be like a rounding error probably in the reality of how that trade plays out on most days.
Wow.
We'll check back in. Perfect.
Pretty well.
Yeah.
Volatility, we got it in spades out here, folks, in the marketplace, no doubt. I mean, you can see that if we look at this S&P for a second, this thing is moving around in a nice way. Let's just get that closer. Look at that.
Yeah.
So we open up. It goes from 27.52 up to 27.62, back down to 27.53, and right now we're 27.58.
Yep.
Yeah. Bulls and bears, folks, are fighting like crazy.
And I was just going to say, we have some earnings today, too, right? The gold company, I think there might be a couple, and the cannabis.
There is.
Might be a couple, too.
Yeah.
Try and pull those up.
Stay right there, folks. Tommy and I come right back. We'll have those oil numbers for you. Dow Industrials up 164, NASDAQ up 27, S&P's up 13.5. Come right back. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Quite a differential from the API last night.
That's right. There's your headline number. Crude oil inventories rising 3.63 million barrels. Looks like the Bloomberg user survey, a rise of 1.8. Nonetheless, we saw the market reacting, jumping back to the futures chart. Oh, and look at that quickly. Spiked below $54. We were trading at about $54.30 coming into that number. So you got a 30-cent spike initially. Makes sense. A lot more oil than they thought. It's going to be cheaper prices if we got that much of a build. And but this thing's going to oscillate for a little while, I imagine, as it tries to figure out. We were just up there at 54.41, spiked down to a low of 53.94, and look at that. We're almost back right up to that level.
Quite a differential, man.
Yeah.
I mean, the API had a drawdown of 990,000
barrels, something like that. Yeah.
And
yeah. And it looks like they were looking for a rise, but of course, there's going to be gas in here. I mean, a couple of these cool stories we were looking at, right, as we were getting ready for this. So Chinese oil buyers purchasing light sweet crude from the U.S. Gulf Coast is a cheaper alternative compared to buying North Sea oil. Louisiana light sweet trading 62.32. The landed cost for oil from Louisiana to China's Qingdao terminal is approximately 63.37 per barrel. On the other hand, China's landed cost for that Brent crude is 63.93. Another this breaks down. Where did I $56 a barrel cheaper compared?
Isn't that cool?
I mean, it would make sense, right?
So it costs. Can you just move that?
Yes,
a little?
go ahead.
So it costs. It's saying there it costs $1.05 to move crude from Louisiana to China a barrel.
Sure, and
that's
you're going
pretty
from
cool,
62.32 to 60.37. Yeah,
Right.
pretty cool.
That's pretty amazing, right?
Yes. So, and then they have China's landed cost 63.93 for Brent crude.
Right.
Which, and then the 56 compared, so that's compared to that 63.37. I see.
Oh, there it is. Cool. That's what I wanted to know. 2 million barrels of oil is in a VLCC carrier. Look at that. 2 million barrels.
Wow.
Isn't that cool?
Yeah.
A fully loaded carrying 2 million barrels of oil. This works out to approximately 1.2 million barrels per shipment.
No, $1.2 million. That's where I got lost too.
Okay,
that's where I was stopped talking.
Right.
So value-wise, over $1 million in oil per tanker.
That's pretty cool, though. Okay, so now we know that the
have over-
VLCCs carry 2 million barrels of oil. Okay.
It's a nice round number.
Yeah, it is. It's easy to remember, man.
And then at where we're trading at, you're looking at $1.2 million per shipment. Let's jump back and see how we're trading. So nothing too dramatic. We're coming back to that 54.30 price point, wherever we were pretty close to that level. But
the fight is on.
Yeah, the fight is on, and there's your full breakdown. So it looks like the median analyst estimate rise of 2.4. The 1.8 was Bloomberg survey. They always are somewhat close. You have Cushing crude declining 1.1 million, basically. Pad 3, I think that's what we're looking at, right? In one of those articles, up 1.6 million. Gasoline, not quite the build that they had thought. 400 versus 1.4 million. Distillate's pretty close. I just want to go over what we were looking at as well in terms of the weather of some of these places, right?
Yeah, this is pretty cool. Yeah.
Yeah.
So what they're saying, folks, is that in Houston, the channels, they were fogged in, so they couldn't get the big tankers in and out.
So it's cool. They put out like just kind of what to look for, what could play into the report coming out. So this starts at 10:22. We're going back before the report comes out, and they talk about fog and bad weather in the Gulf Coast led to reported loading delays at various shipment terminals, including those operating Corpus Christi. And so that would put a damper on exports. It'd be a bigger build, right? You can't get the oil or the oil refined products out. And then they tie back to it as well to follow up. You had the Houston ship channel. They closed several times last week. It could curb exports of refined products, LPG, and they just talk about the timing might not be ideal as the U.S. is still working through a massive glut of fuel that has depressed crack margins. Now, fast forwarding to the number we got, gasoline, right, rising, and that's probably playing into some of that they were talking about.
Because they can't make as much of it.
Yeah, and so
Right.
Yeah.
And, you know, folks, if you've never been on the Gulf Coast, Tommy and I were just talking about this in the break, the Gulf Coast, you got to go out like 30 miles on the whole coast before you get to deep water. Like if you're in the Atlantic or the Pacific, you know, you go out 50, 100 yards and bang, you're going down.
Yes.
Around here, that's not how it is. So
We're a bay,
it's crucial that the aspect when it's foggy and stuff, okay, you know, these big tankers, man, you know, they have to be brought in, you know.
And I said to you, like, captains must go berserk trying to navigate Tampa when they have to, because even in a small boat, it's so often you can't deviate from the channels in one way, because the channel's literally dug, and next to you is like 2 inches of water.
The seagulls.
Yeah,
the
they're
literally
literally standing on the sand.
At low tide.
Yes,
you know,
right. No,
but even at high tide, you're only 4 feet, bro.
If you've never seen low tide, though, it's shocking.
It is.
When you realize that you look out across the ocean and you think, especially like us, we come from the Northeast, you know, oh, look, it's a beautiful sea. And then it becomes low tide, and it's like the sand's like 6 inches under there the whole time. Yeah.
Dirt.
Yeah.
Let's go take a look at the gold market out here. So gold's caught a bid once again. And it's going to get intriguing because, you know, this has been acting perfectly that it wants to get to that 1375. And what I'm talking about specifically is that you've been continually going higher. You have volume going higher. When we came lower, you're going to see that, you know, we did 167,000 contracts last week. Well, that baby's coming into, what, 180, 272. And what you're going to have out here today, bang, expansion of volume once again, right off the bat, man, right off the bat. We're going to be taking out the swing point of 1319. And look at this. We're 1319 at 136,000 contracts are already at 129. You know, so this baby's going. And it probably has to do with the aspect, as we were all talking about with Kevin, is that CPI was actually hot. You know, if you what's always intriguing is that they've always talked about the aspect that when you take a look at the energy, sometimes, you know, there's a couple different ways they do it. They pull it out, they put it back in. Energy's energy, though, you know. But
yeah, and I pulled this up when you were talking to Kevin earlier. I wanted to get the breakdown. Do they have it? There we go. So they had the gas in here. Yeah, gasoline prices fell 5.5% from the prior month, and we're down 10.1% from a year earlier. And so, you know, the conversation was, we still have a CPI at like 2.2, factoring in gas prices here. So the rise outside of gasoline prices is obviously much higher than 2.2 as you're factoring in that to the overall number. Apparel prices reflected outsized gains in footwear, which had the biggest increase since 1988, and women's clothing. Yeah, I was kind of going through just, you know, and they're cherry-picked statistics, but you can see that in certain areas there's some price appreciation there for sure. And
home cost, that's, let's see, both rent and owners accelerated with 0.3%, but that's more than 3% annually.
Yes.
It's a big number.
That is a big number, for sure.
Car prices.
Yeah, and did you see
I think the apparel is probably the biggest. You know why?
Apparel.
Because what happens, folks, is that we don't need, like, lots of new shirts and clothes and all that. So that means that there's extra cash, they're pricing it up, and people are buying it. We're all buying it.
Sure.
That's what it comes down to, so.
Yeah. Did you see this story, too? We don't even have to talk about it. Just about that auto debt. You see 7 million people behind by 3 payments and to check back.
By 3 payments, that's a big number.
90 days. Yeah, it is a big number.
It's a big number.
But oil trading 54.37.
Stay right there, folks. We're going to come back with our man, Mr. Teddy Kegstad. We're going to be talking currencies. Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's up 183, Nasdaq's up 32, S&P's up 15.5. Let's go over to our man, Mr. Teddy Cakestat, as we do each and every Wednesday at 40 past the hour. You can reach Teddy every trading day, folks, at forex-trading-unlocked.com. Teddy Cakestat, what's going on, brother?
Morning, guys. It's a pretty interesting day in the currency market with the way the currencies shifted around this morning.
There's no doubt, man. These currencies, man, are running the market, Teddy. You know, we're like the Groundhog Day. They've been at these levels now for what, 7 or 8 weeks. But the reality is that they are what they are, right? It's like they're gonna make it or break it, man.
Absolutely.
Yeah.
Well, remember last week we were talking about the Swiss, the dollar-Swiss relationship and the parity, about closing above parity, which had happened to do that Wednesday.
Yep.
And since then, the rally has been buffering up against some key resistance right now. It's on a weekly and monthly breakout level.
Okay.
So I think if it wasn't a normal day today, I would say, wow, this might actually be looking for a breakout to the upside, and the dollar is going to get a big boost. However, if you notice, the dollar index yesterday had a really big rally. Today, the current dollar opened up very strong before the inflation numbers, and because there's all this soft Brexit rumor stuff going on.
Yes.
But then everything fell apart. Right now, the dollar index is down on the day, and it's down big. So, and in the midst of that, we've had buy signals in a couple of currencies over the past couple of days, too, especially in the pound and also in the euro. So if the dollar index stays weak, and it does start to really push, things settles lower today, then these buy signals in these other currencies are going to be validated, I believe.
Yeah, they'll accelerate pretty quickly, won't they? Particularly because, you know, we already had them up, folks. They had a big pullback. They went up, well, the euro didn't go up big, but the pound went up big. Had a nice pullback, and that, if you watch that go again, it's like, okay, man, there's a pile on there. And particularly, I mean, it looks like Brexit, I mean, they might push this thing out 6 months, a year. Who knows where that's going to go? But we're going to know in the next few weeks, man.
Right.
Yeah. You know, what you can get out of this, folks, which is pretty cool, is that the pound has been basically saying this since the last vote. Do you know what I mean? That the pound is feeling better. It's kind of saying, okay, they're going to leave you alone for, you know, a certain amount of time.
Yeah.
Yeah, yeah. Gotta love it, man.
I think that really the pound found out that there might not be a hard Brexit.
Yes.
On that moment.
Right.
That's at least what people might be thinking.
Right.
To allow that.
Right.
And we have a buy signal in the pound too.
Nice. Okay.
On the daily.
No, you
So,
don't.
which is big because the pound and the euro giving buy signals in going against this dollar rally. If the dollar index does close lower today, then that validates the buy signals in those currencies, and we should definitely see a little correction against the dollar. Except for
then you get those currencies in harmony then, right? Which is always sweet, man.
Right.
No doubt. So the yen's not cooperating just yet, you know?
No, I stick to the stock market is what's driving the U.S. dollar-yen relationship.
Yeah.
So no matter what the dollar does, I think that the U.S. dollar-yen is going to be just following the stock market.
Yeah. Okay. Cool. Okay. That's yeah. I can see that. You know, it's kind of like, you know, my take always is the NDX 100 it basically drives the market higher and drives it lower. It'll yank it up and yank it down. It's like, okay, it's the mover, you know, because of the growth in it, you know. So.
And then, like with the inflation data, the way it came out today, the way the markets ended yesterday with this dollar index rally, you had the short-term rates, the 10 and the 2-year note, they went lower yesterday, but the 30-year kept going higher. So you have another inequity imbalance now between long terms and short terms. Short term is trying to get the market higher, which is going with the dollar rally.
Yes.
I think the bonds are indicating that no, the currency is going to turn and rates are not going to go higher, even though the market's trying to push it there.
Yeah. No. Listen. There's no doubt that I think the bonds, as I've said a million times, are the most consistent information in the marketplace, and they have been for a long time. I mean, you know. When they keep rejecting lower price, like yesterday, we're up, market's up big, the bonds won't go down. It's like, really? And then this morning, when that CPI number come out, the 10-year dove in a second, and then bang, it stopped in its tracks, like, and it couldn't take out the low last week. And it's like, okay, man, there's some monster that's sitting there with monster orders saying, I'll take all you want to sell. Give me them all. So.
Right, I'm with you. There's someone saying, I'll buy everything in sight.
Exactly, exactly.
Mm-hmm.
And, you know, folks, the bond market is 10, 15 times bigger than our equity markets.
It's quite a market.
Yeah, it's the whole ball of wax. So, gonna be interesting watching.
Tommy, you can almost picture like back in the days when the bond pit was big. There's like 4 or 5 guys that are just totally bid, saying, "Okay, I'll take everything."
No, listen, there's no doubt.
No one can sell against them.
Hey, I remember even when I wasn't trading bonds, every equity trader in the world would watch bonds, and bonds at that point, folks, okay, they wouldn't be traded like now. If the 10-year moved 3 or 4 ticks, oh my God, that would have moved the market beyond belief. But it was always it's always been important. That's my point more than anything, I guess. You know what I mean? So, pretty amazing. Yep. Well, we're going to see where this baby shakes out today. And then there's no doubt that I guess when we cut to the chase, you know, it really is all about where this. It's not necessarily where the dollar's going. It's almost where the pound and the euro, where the euro's going, really, because the euro's the one that seems to.
Well, if those two buy signals are confirmed with the dollar index collapsing over the next couple of days,
yeah,
then that's exactly what will happen because the pound and the euro are a good 70% against the dollar.
Yeah, right.
So.
Right. Gotta love it. And, you know, hey, the pound's always been strong. I mean, you know, since Brexit, I mean, those poor people, if they had money overseas, they got smoked, like, overnight, you know? So.
Right. Absolutely.
Every time you go to
But it's a good trade, though, I think. I think tomorrow, if you watch the close today,
okay,
there's a good trade for Thursday and Friday to ride that tide with a little upside. If the pound settles higher, go into it until Monday or Friday with a nice rally.
Yeah.
Same with the Australian dollar and same with the euro.
I like it.
So, yep. Those are some trades to look at for the rest of the week.
I want to jump on that surfboard, man. Ride that baby. Totally.
I want to get out of Chicago, that's for sure. It's cold here.
Oh, you poor guy, man. I'm telling you. we, you know, it's a little rainy here today. We woke up, it's like, oh my, but it's still 75 degrees. So.
Yeah.
You're not in the Northeast either, right?
No.
Boy,
I was seeing some friends posting videos. Stay safe up there. One buddy was think it probably had to be 128 for 2 hours sitting in snow, man.
Oh,
yeah.
that's the road from hell. That's where we grew up, Teddy. Route 128 is literally the road from hell in Boston. It's
It is now
it's a circle that goes
they
around
haven't
Boston.
expanded it in 40 years
Right.
for more lanes, so
Right.
so there's a lot of people using it at this point.
Yeah. to go 4 miles sometimes, it might take you 45 minutes.
Oh, yeah.
Yeah.
Oh my gosh.
You know, and that's being kind.
Yeah.
It's not. It's more than 45 minutes today. Yeah, there's no doubt, man.
Oh, jeez. That's crazy.
Listen, folks, as you come over, you can reach Teddy every trading day at forex-trading-unlock.com. You can listen to him here every Wednesday, 40 past the hour. Get our lowdown on where these currencies are going to go. And bottom line, they're fighting over these numbers. I like it, though. And it looks to me that pound and euro or the pound definitely wants to go. The euro just hasn't been able to basically do it yet. But we'll put some juice behind it today, Teddy.
How about it?
Cooking, brother.
You guys have a great week. Thank you very much.
Have a great
Thanks
one.
so much,
Have a
Teddy.
safe one. Look forward to speaking to you next week, Teddy.
Take care.
Stay right there, folks. Tommy and I are coming right back. We have the Dow up 193, NASDAQ up 33, S&P's up 16. We'll come right back.
The universe provides us with opportunities all the time, and I was no different. In 2006, I invested $2,500 in a 2-day master trader course taught by Tom O'Brien, then ranked as the #1 market timer for gold. The fact is, if you want to be the best, you must learn from the best. Hi, I'm Steve Rhodes, author of Mastering Probability and the Market Timer of the Year for 2018. To celebrate this accomplishment, TFNN.com is offering you a free 2-week subscription to my award-winning newsletter service, and there's no charge to you until day 15 unless you cancel sooner. That's right, we're waiving the normal upfront deposit, and this offer is available to anyone and everyone, even if you've tried Mastering Probability before. Sign up now, and I'll teach you the tool that identified the bottom in the Dow on January 26th, the morning that led to the largest daily point gain in history. This offer will expire on February 10th, so go to the homepage of TFNN.com now and click on Mastering Probability.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 169, Nasdaq up 23, S&P's up 13. If you come over to our website, folks, at TFNN, our man, Mr. Steve Rhodes, we're celebrating his 2018 Market Timer of the Year for the S&P. Bottom line, this is your last chance to get a great offer.
You got it. Get in there today. Last chance. We've been running this for a couple weeks. Today is the final day. We'll be taking it down tonight. You can get in there and get 14 days completely free. You can sign up for whether you look at the monthly, the 6-month, or the yearly. If you think you're going to keep it, I encourage you to check them out because you still get 14 days. You're charged absolutely nothing. You can cancel at any time. You also gain access to a number of webinar archives in there instantly, and Steve's outstanding newsletter, trying to get it in as many people's hands as possible so they can check it out. So
it was
check
a quick
that out.
2 weeks, man.
It was a quick 2 weeks, and I think it might have even been 2.5 weeks.
Amazing.
I got to go, yeah, but time is crazy. I mean, what is it, February 13th already? So you get access to Mastering the TD Setup 9 Count, and I know there's another webinar that's going up there as well, I believe today.
You get his money management in there.
Yeah, yeah, how to use the black box signals, and then there is another one that he had added as well that's going in there today. So check it out. Runs through today. You can sign up, pay absolutely nothing for 14 days, and be in there right now.
Where's that oil market?
Yeah, where is that oil market? I don't think it's had that big of a move, actually. Yeah, 54.15. So, you know, decent moves on a 5-minute basis in terms of 30 cents. Even, and this takes some time, as in that's why I think you and I, we go for those noon ones, because the first half hour isn't always enough for the market to digest kind of where it wants to go off that report, or just sometimes where it wants to go regardless of that report. So 54.14, and yeah, we'll see where we end up.
Folks, stay right there. We got Fast Market coming up next, and we got our man, Mr. Basil Chapman, Steve Rhodes, Dave White. Will be back this afternoon. You can expect this volatility to continue. Thanks,
That is for sure. Thanks, man.
Wow! Go get him, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.